Okay, well, thank you for joining me. Welcome to our daily market review and analysis. It's Tuesday evening. We're looking at the euro pairs along with other charts of interest. And before we begin, just to let you know that yesterday I think our recording was rather long, and for some reason, although we have loaded a longer recording on YouTube previously, but for some reason the recording from yesterday never really got properly loaded onto YouTube. So I've tried it 3 times and it seems to be forever going up to 95% and then just basically appears something is happening, but it's just not completing, and hence you may not have been able to access it from the YouTube. So I do apologize for that. Hopefully the next one should be a shorter one and we'll be able to load it up onto the YouTube. But nevertheless, there was also a recording uploaded on Dropbox, and I hope you were able to download it from there. So let's begin. And also just to point out that because there was a lot of material covered yesterday, what I plan to do is maybe refine some of the most essential element of that I went into regarding the major market trend in months to come, and possibly do a separate video so that it is separate and you might be able to maybe keep that as a point of reference, and possibly also along with that to supply you with some charts that you might be able to refer to or make notes on as we go along. Okay, so let's begin. So looking at the equity index, and we commented yesterday that for some reason in recent times the equity index and the dollar normally have an inverse relationship, and when the equity index going up very strongly, we should have corresponding weakness in the dollar index, and similarly currencies like euro should also be rising very strongly in line with the equity. But recently it appears as though that particular relationship seems to have been either stretched and there is very little correlation, or that it has broken down temporarily. It will probably fall back into it again, but for the time being, like for example today we had an equity go up very, very strongly, and dollar also tried to go up too, or it went sideways, and then the euro also went sideways and didn't really move very much. So looking at this one now, we started off from the low back in November. We had this first wave 1, wave 2, and then all of this here I think is a part of a wave 3. So in that wave 3 we've got minor 1, minor 2, minor 3 here with this rising wedge as a finishing minor 3, minor 4 and minor 5. So that completed a wave 3. So wave 1, wave 2, wave 3. Then we had a sharp sell-off in ABC as a wave 4, and we are now presently continuing to go up in wave 5. So what we are now looking for is wave 5 to complete. And yesterday when we were looking at this last piece, we thought maybe we've got an ending diagonal possibly. However, from the price action of today, it appears that ending diagonal is no longer valid. So now what we've got is from here with wave 4 is probably we've got this one somehow, some kind of a wave 1 or some combination of that. I can't really make up my mind what it is. Maybe this is 1, then possibly and within that there will be some hidden wave, because I'm looking at it on an hourly. But if this is 1, then maybe A, B, C up, so wave A, B and C, probably that's how it is. So wave 1, wave 2, then wave 1, wave 2, and then this part of wave 3. So we got 1 2 3 4 and 5. Okay, so that's 1 2 3. It doesn't really follow. I think in short what it is, I think somehow, is that this is complete wave 1. So whatever this is, in some manner this here is wave 1. So we could assume that that's what we are working on. This is wave 1. Okay, then we had ABC back down as a wave 2. So this one here is very small wave 1, and then this one is a wave 2, and then currently we're working on a wave 3. So in that wave 3 we've got 1 2 3. This looks like 4. Maybe we'll get a small drive to complete wave 5, and therefore that will complete like so. Okay, so we will finish up with 1 2 3 4 and 5, and by the time we finish with 5, I suspect we will probably bump into something like 14,500. We've almost done 14,200 and something today. At one time it was nearly 150 points up, and then it closed a little bit lower down, but I think tomorrow it looks like this is just going to continue. So my bias for this current week on equity is that it will probably still continue higher, and we may well form and close on a high. Or on a Friday what we might do is we might spike up and then really sell off very sharp. Not sure which of the two will be the case, but tomorrow we go into Wednesday, and then we have a Thursday is when the Bank of England comes out with their interest rate decision, and also maybe some details regarding the ongoing quantitative easing, and then likewise the ECB will also have their rate decision and press conference from the president of the ECB, Mr. Draghi. So there are some important financial data being released over the next couple of days, but it looks like the fact that we are in the current 5 wave up, and also if you look at the RSI, then it looks like the highest RSI momentum is with the current high. So that's why I think that maybe the whole of this year somehow is wave 1. Okay, and then maybe wave 2 back, wave 3. So this one here will finish up wave 3, and then wave 4 here, and then finally wave 5. And I think by that time we'll be ready for reasonable pullback. And if you look at it overall, this one, I think what I need to do is change the labeling so I don't confuse it with the first one that I labeled on the last leg. Okay, sorry about that. There we are. So it looks like we're in a final stage of this one, and chances are that we will conclude that once we've done 5 wave up, then we will have a retracement coming down. Just exactly to what extent will depend on what we are retracing, and I think the likelihood of this 5 wave completing to maybe give us a wave, either an A or something. So here we had a W, X, Y and an X, and quite possibly we might not even have an A. That might actually turn up and possibly maybe a Z, or it might be an A. Okay, so if it is a Z, then that means we have completed this triple zigzag. So we get W, A, B and C to give us W, then we had X, then this one here is a complete 5 wave up. So ideally, because this was ABC, this one should be a wave A. No, it can't, because this is the wave A. This one looked like an X wave, 1 2 3. So so that one there, okay, we'll call that B. And then this one here we are currently looking at would end up with a either a wave, so we are W, X, this one is Y, or an A. Okay, so if it is Y or an A, that means potentially we've got a double zigzag. So we've got ABC, one zigzag, X, ABC, second zigzag. And we could correct all of that, or it may be that if this one is W, X, ABC to give us Y, then we will only correct partially. Either we'll get another X here, for example, and we would most likely then make another leg higher. Okay, so then eventually we'll get a Z here, and by that time we'll be, yeah, I think we'll be moving up quite a bit. So we'll finish up with a triple zigzag, the A, B, C. So we have a first zigzag called W, wave X, A, B, C, second zigzag Y, X, another A, B, C in that particular manner. So we are still currently progressing to the upside with possible a larger retracement expected later, maybe next week, or depending on if this current zigzag is over, then maybe next week. So we're looking at basically from maybe middle of March to maybe back end of March, we would expect that retracement. So currently the bias is to the upside on equities. And then we look at the oil. Now the oil hasn't moved very much. Mind you, this is the weekly chart, so you won't see a lot of movement. If we went on the daily, you can see, you know, last few days we haven't moved very much, but it is due for a bounce. So most likely we would find that the oil will catch up with the equities, make a small bounce. A small bounce will be retracement of this move down, so partial retracement and then another leg down. That another leg down will probably wait until equities are ready to come down. So whilst the equities are climbing up, I think the oil should find some traction and begin to start picking up momentum to the upside for a partial retracement before coming down. So oil is also supportive of the equity index. And interestingly, if we look at this commitment of traders report, which is basically based on a position as existed on Tuesday last week, and it is released, normally it's released on a Friday, but it relates to position existing as at close on Tuesday. So for example, it will be like 26th of February. Okay, so the one that I'm going to look at is come on, what's happened? Okay, the one that I'm going to look at is regarding the S&P, probably not, but it's the Dow that I was looking for. What's it called? Unfortunately, you can't mark this unless you had some other ways of marking them, putting a highlighter on sort of thing. I haven't quite got around to finding a way of doing that. Well, basically there is still a short position on equities, I seem to have remembered. Okay, we'll have a look at it another time. I'll find it and maybe take a screenshot of exactly which particular page I was looking at. I thought I'd try to be clever by, rather than doing a screenshot, is actually to go onto this page. But anyway, I'll come back to this page later for something else. So that's the equities. So if we look at the dollar index in the same way, then this is the dollar index. Now when we start looking at the wave counts, I won't go back historically too far, but as you know, since the low here, because of this flat correction, we are looking for a 5 wave to the upside to complete retracement of this one here. Okay, now in that respect, two things. First of all, there is a resistance line coming up at the top there, for example, where you see this red line. And just so that you know, this is how I've done it. I use this spike high on dollar index, which is November 23rd of 2008, and then this high here, which is 6th of June 2010. So that gave me this blue line, and then I copy pasted the same line and I put it on this spike here, which is a spike of 1st of March 2009, and that comes in and plays with this high we had in July with a minor overthrow, and we're coming back into that region. We haven't quite approached it, but we are approaching that fairly soon, and it could be we would probably make a direct hit on that or marginally miss out, but that would be closer to 78% retracement of this entire drop. So having said that, we are in a flat correction here with this ABC as a zigzag into double bracket wave A, ABC down here, another zigzag to give us wave B in double bracket. So now this one we expect in a 5 wave, which is what we've observed. And when we're in a 5 wave, wave 3 has the habit of extending. So previously we thought that wave 3 finished here, and that was 4, and this was 5, maybe it's finished, but then wave 5 is disproportionately smaller compared with the rest of the waves. There's nothing wrong with that, but it didn't look right. So I then hinted that maybe we would get this wave 3 extended. So last time when we were looking at it, this wave 3 was here, and this wave 4, if I can get it to move, that wave 4 was there. Okay, now I'm looking at it and I'm thinking to myself, so if that is a wave 3, then this is wave 4 and wave 5, then practically we finished. Now we may qualify for saying it's finished in the sense that we got a divergence. However, this last leg that we look at is also relatively too small, and since then, so we have two possibilities. Is that one, this is wave 3 and this is 4, then this last one is actually finished here. This one could well be finished, and it would probably have this strange kind of wave with the last one being a failure. If you look at an hourly, you see, so you'd have wave 1 up, wave 2, wave 3, wave 4, and then wave 5 is some kind of a failure, but it doesn't look like it, you see. So I think, see, this wave, even if I go into smaller time frame, see this one looks quite strong wave down. This up looks more like a retracement in comparison to this drop, and then this one looks quite strong and quite dynamic. then we had ABC retracement up. So I think this is 1, this is 2, this one is 3, and ABC is 4, and we are currently trying to come back into the 5. So assuming we drop this one down, how are we going to do it? So say this one comes down and forms a low here, then technically that would be like a 5 wave to the downside completing. So that could be potentially either a wave 1 or an A, in which case we would either expect a wave 2 or B. Okay, so we'd expect a wave 1 or an A, 2 or a B, and then maybe if it is a B, then we'll come for a C and then go up. Or if it is a 2, then of course this one will be dynamic. Okay, so but then this, you know, this one here, see this momentum on the RSI, that momentum on RSI on the hourly correspond to the high on the price. So something's not right here. So, and also if you look at that RSI is actually even higher than this one. The previous one was higher, but that was very first beginning. So, and this one is 3. So I think somehow that this wave 3 has extended. So that's why I was putting this wave 3 over there. And so what we might have is probably wave 1, wave 2, and then all of this is wave 3. So you go 1, 2, 3, 4, and 5. Okay, so in that sense, we have this one here will be more like wave A in that case, you see, this wave A. And then this one will be wave B. And then this one here coming down will be C, so will be wave 4. So then after that we'll have this final leg up, and you can see then now we will have a secondary divergence. So we had a first divergence over here on this 4-hour chart over here. So that would be wave 3 of 3, wave 4 of 3, and wave 5 of 3. Okay, so that wave 3 finished. We've come down to wave 4. When we go back up, we will not go back to that high. So I think that's more likely what I am now expecting, meaning that there is going to be another high on the dollar index. So we've got, originally we were saying 82, 82.50, but it's possible, well, we've done almost 82.50, fairly close, but I think this ABC will come down, will go back up. And if you draw a trend line on this 4-hour chart, so I'm connecting effectively this low along with that low, which means that these two stick out. But then if you do the parallel line, put it on the top, you can see the top ones are picked up very nicely, and then the bottom one, this one is an overshoot to the downside. So if I then put a parallel line on there, I think we might come back into that and then maybe one more high. So what does that mean? It means currently we are retracing somewhat. We've done this first leg down in a 5-wave motion, which is almost complete. Maybe a little bit more weakness on the part of the dollar will do that. Then there'll be a small bounce, and then maybe another weakness. But that might all be done, I think, tomorrow, and that will leave us with Thursday and Friday, possibly for dollar to really race up and make a top. So this is why I'm saying that equities are pointing upward, but the dollar is also pointing upward based on the count. And so this is why we've been puzzled, and maybe that is why a lot of, well, maybe it's the wrong thing to say, but you know, there's always confusion in the market. However, the very fact that relationships don't seem to be there that you normally expect is causing a little bit of confusion in terms of exactly identifying which one is moving where. So anyway, so the dollar index, I think we should see a partial retracement, probably down to 81.75 maybe as a round figure, and then from there it will probably run up, and it might not even be all complete by Friday. It might even carry on next week, but certainly then I think we'll be topping out closer to 83 area, and there we will have done the 78% retracement of the entire drop from July to September. And we will have also, obviously there are several other Fibonacci relationship coming into there, and we're also coming into this trend line that I applied and I just showed you a little while ago. So dollar index is still pointing up and is still in this nicely trending uptrend channel. If we seriously break below that, that would confirm then that perhaps the top is in and the dollar index has actually topped. So if I now follow that up with something like dollar Canada, you see dollar Canada, I'm also expecting the same, because in this broad, well, relatively speaking, this larger rising trend channel, we had this fairly sharp trending narrow trend channel. So I think this is one, possibly, or rather we had ABC. So this is one, this is two. This one I think is a 3, and that was this one is 3, 4 and 5. So if we got this as a 5, it doesn't look it, but if this is 5, then maybe that means the dollar Canada has stopped already. Double zigzag, we got A, B and C, and within that C we got a 5 wave up. So dollar Canada, so this is clearly wave 3, this is retracement wave 4, this one is 5, in which case we would say this 1, 2, 3, 4 and 5, and then in terms of the RSI, do confirm, you know, divergence between wave 3 and wave 5 like here. So dollar Canada appears as though done. However, if that is done, then I mean the dollar index is done, you know. But the dollar index is still in you can see is how clean and is very neat and tidy uptrending channel. Dollar Canada doesn't show that, unless you see, I mean, I've got no other ways to go. The only thing I can draw is this one, because that would be the prior. You see, based on that, it doesn't follow, because if this is wave 1, wave 3 never got to the top. So I think that clearly doesn't follow. Not too sure really. It doesn't follow. So really the only thing that follows is this, you know, what we had previously, because then we can see the wave 3 goes beyond the extremities of wave 1. So wave 1, wave 2, this is clearly wave 3, wave 4, unless if this, what we see here, wave 3, and then we've got this expanded. So we've got wave A, wave B and wave C expanded flat. That's the only thing I could expect that might then harmonize with the dollar index like that. So whilst the dollar index is still retracing to the downside, we'll see dollar Canada also come down, maybe make a double bottom here, and then when the dollar index runs up, the dollar Canada will run up and finalize this 5-wave movement to the upside. And if you see here, it is also approaching to 88, in fact 88.6%. So that's a very deep retracement like that, 88.6%. And also on the daily we will see a clear divergence forming, which at the moment is only this minor divergence from there, but when we get this other one, we should get a clear big divergence, I think. So so dollar index, I'm expecting a bit more weakness and then going higher. Likewise, dollar Canada possibly doing a flat, so it needs to come down and then go higher, and then dollar Canada will be ready for shorting. It will have completed all of this, and then, you know, in terms of the downside target, we'll be expecting at least the retest the low in September, maybe even you know, another low further down, but definitely low of September. So that's the dollar Canada. So let's now go on to the euro pairs quickly, and then we'll come back to some of the other pairs in a moment. So in a euro pair, we look at the euro pound first, and we looked at this yesterday in euro pound. We've considered last week that we had this megaphone kind of rising, you know, megaphone expanding, in Elliott wave we'll call that expanding ending diagonal, and it had this wave 1, wave 2, wave 3, wave 4 and wave 5, and then subsequently we had a fairly sharp sell-off, which I think is a wave A, and then the current congestion is a wave B, and at the moment you can see what is happening, in a sense that we haven't really moved very far out from there. So it's relatively what we might call like a flat. Okay, wave A, wave A, and then A, B and C is a wave B. So what we might now expect is for this one either to simply continue down, in which case we've got wave A, then A, B and C as the B, and we should be going down. So that's the one possibility. And in terms of going down, we should be at least coming back to this sort of level here, which is around 84.50 area, and that would represent 50% retracement of this entire rise. And Elliott wave guidelines also indicates that when you are retracing, it could go down to the previous wave 4 of a lower degree, which is this one here. So it's not unreasonable for it to drop down to 84.50, but if it came to here at 85, that would be approximately the minimum, which is 38%. Okay, so either we could drop down, we would come to 50, because then we'll have some kind of a symmetry, or because we have a flat, what we might happen is a euro pound could actually run up. So in other words, we had a wave A, then we got A, B and C, and then come down, and in which case it can come down to 38%. Okay, so I'll say either we'll follow this pink route or magenta route, or this one. Okay, so we're saying either this magenta or the red route, but in reality we are not interested in shorting this one, you know, because it's a higher risk in terms of the general trend being up, and currently if you try and short, then your stop can be up here, but it's 50-50, it's not clear. I mean, if it begins to move down, that's fine, otherwise it will stop you out. However, if we find that we get a retracement of this one, a fairly deep retracement relatively speaking, so in other words we get something like this, you know, like 61.8% or even 78%, then and that particular leg would have to be with a 5 wave, so we could easily get bamboozled, because, you know, that 5 wave up, we might interpret that as a new trend to the upside. Okay, so I think as far as this is concerned, what might happen is if this one bounces up, then I think the pound is going to sell off on a Thursday. when the interest rate decision is announced, along with the their whatever guidelines they've got for the quantitative easing, then the pound can get really weak, and the euro can rally against the pound, and then it will be like a panic selling on a pound, which would then end, and then the euro will start weakening against the pound. So that's the hypothesis, or that we simply just continue straight down like we are doing now. But in that case, it would be better from our perspective, because even if it went up there and came down, we're talking a couple of 100 pips, and we need some clarifications. And when these pairs move sometime, within an hour, before you're waiting for close of the candle, and look, it is sort of gone and is moved nearly 100 pip. So I think really let's focus on the fact that we are expecting either of these, either a pink to continue straight down, or bounce up and then another one down. But we want, if it went up and came down, we'll be looking for a long round 85.50 area, which is 38% retracement approximately. And if it just continues straight down, then we'll be looking for 50% retracement, which will be where we had last low, and we'll probably get a double bottom. Then it can pick up from here, make that one in a blue color, so suggesting that then we will start rising up. So those are the two possibilities, is that either we will continue straight down to 84.50 area where we can look for going long, or this will bounce up and then come down, and we'll be looking for a long later on. Either way, I think this long position probably will not line up until late Friday, maybe even early next week. So the euro pound. Then we go into the euro CAD. Now the euro CAD has been moving in this contracting triangle, and this contracting triangle usually either a wave B or a 4, and I think we have a wave 4, because we've said that this one here is wave 1, this is wave 2, this sharp up is wave 3, and then we got a triangle of the wave 4, and we are expecting a wave 5 to go up and complete that 5 wave sequence. Okay, now having said that, that brown trend line we pointed out previously, and you can see how I've drawn on this 4-hour chart, has been acting as a strong support, and at the same time horizontally we had a region where there is a support. And I think if the RSI is suggesting that we are bottoming out on 4-hour, and on the daily, you can see we've got this kind of a coiling action going on, which suggests that there is a strong move about to take place soon, and this is like a falling wedge on RSI, so we should be breaking to the upside. So looking at the price then on 4-hour, this is ready to, I think, almost start going. Maybe we've got you can see here that a little bear flag kind of a thing this year. If that's the case, then we may get overnight a minor drop down, okay, meaning we would get like that, and the brown line will be marginally compromised in this particular instance before we are able to start moving up. So I think euro CAD is really speaking lining up for a potential long around current level, or marginally lower. Okay, so the best thing then is that if we draw this trend line here, and I'll make that one look like a green line to contrast it. So if we see that, and we ignore the spike, but we just close, or we draw the line from the close of that candle to the bottom. So if you find the price action remains with on the lower part of that falling green trend line, then we are still waiting for a bottom to form. But if we begin to find that we've formed a bottom and we start moving back up, then we are really ready to get long. So if you wanted to trade long on a euro CAD, that would be the way to do it, and we are still looking for ideally a low in this area to form in the next day or so 4-hour chart, so it will take a little while. But here this clearly to me looks like a bear flag, so we should have another leg down, but not a big massive one. And I think in that particular case we are ready, most likely we are ready to see if you draw this one, it's too shallow. So if you draw the other one, let's see, I'm just trying to think if this is going to give us a falling wedge. You see what I mean? Is that we've got this first drive down, retracement, second drive down, retracement, we're looking for third drive down. So that makes it look very interesting actually, is that we would see that one as a potential ending diagonal. Okay, so we had ABC to give us wave A, ABC back to give us wave B, and then it not turn out to be contracting triangle. That's why we are getting a little breach below the bottom. So then what we got is we got this ABC as a wave A and ABC back as a wave B, and then here we get wave C, and in that wave C we have 5 waves. We get 1, 2, 3, 4 and 5. Okay, so that makes it very interesting. If you want to trade long, we should be looking for a low to form in the region of 133.20 to probably 133. So I say ideally 133 with a small adjustment. Somewhere in that order, 133 area, we should be now fairly very close to Euro CAD offering us a potential long opportunity. And we are looking for a minimum would be to retest the high or maybe make a new higher high. And if you look at it overall, then I think longer term what might happen, we'll produce a high, we'll come back and retest that one, and then go. So this first entry you get in, that's not going to be a big swing trade. That will be like an intermediate trade, because we'll be expecting a retest of the high or maybe minor higher high. Okay, then it will come back down again, and within that area we should be looking to go long for a proper, because this will form 1, 2, 3, 4 and possibly 5, but it could get a little longer if we could get going like so, for example, before we come back down. Okay, now if we did have a real run at it, then what we might find is when we drop back for a retracement, we'll come back to that level here. Okay, so initially retest the high and maybe another higher high, so that would be the 5 wave sequence complete. And if we get a higher high, then I think I would be expecting it to at least probably go to something like 140 area before coming down. That's where the extension of this leg applied from 2 gives us 161.8% extension. Okay, and it may even be that we might get an extended wave and we'll really start motoring. We won't necessarily come back because this might be 1, 2, 1, 2, and then will be wave 3 of 3. So that is also then we'll go really high. We'll take out this previous resistance here and we'll go much higher. So I think the best thing with the Euro CAD is to at least establish a long entry if you wanted to trade this one to the long side, and trade strength of Euro against the weakness of CAD. Okay, so potential long entry there. Then the Euro Yen. The Euro Yen is still currently retracing, and I'm expecting another drop down before finishing this wave 4 and then going up higher. Okay, we may even, for example, if you were to draw this trend line here, you might be able to see possibly price come back into the lower end here in the region of 118 area, where a Euro Yen might offer a potential long opportunity. And again, this will be similar to Euro CAD, except that Euro CAD is only just getting going, whereas in the Euro Yen we've been running for quite some time. So this would be wave 3. That would be wave 3. Then we'll come back into wave 4 retracement and then go up wave 5. But you can see it has a very similar sort of look to Euro CAD also. So Euro Yen would give us an opportunity to go long, but we're expecting a low in the area 170, 118 area approximately, maybe a little bit lower. Okay, and that would then reflect in most of the other yen pairs also, with the exception of US dollar yen. US dollar yen hasn't actually come down that far, although it's done a different kind of retracement for this particular wave. Euro CAD, Euro Swissy will leave out. We look at the Euro New Zealand. The Euro New Zealand is the strangest looking chart from the Euros, because we're getting this kind of a crazy looking, you know, is it horizontal, is it rising? This here 1, 2 from the very low here back in August of 2012, we got 1, 2, 3, 4 and 5. So I'm fairly clear that is a complete 5 wave cycle to give us wave 1. Then we got A, which is ABC zigzag wave A. Then we got A, B and C to give us wave B in bracket, and we've come down for C, so that's given us 1 and 2. Then I think we've got a secondary 1, and then we are currently retracing in 2, so it's 1, 2. So in other words, this one is giving you like a what I normally call super nesting. Super nesting meaning it's a series, is not getting very far, but it's a series of 1, 2 of a larger degree, and then 1, 2 of the next degree, and then the next one should be wave 3. So then we'd expect a wave 3 to start commencing, and if it is the case is 1, 2, 1, 2, then I think the New Zealand dollar will probably be very, very weak going in over the next few weeks. You know, on the longer term, we have bottomed on this, and we are, you know, looking for momentum being gathered to the upside. And for the time being, it looks like we've just moved sideways, but we've completed 1 and 2, 1 and 2, and we'll be going into 3, which is the wave 3 of 3. That should be fairly strong wave. So again, if you wanted to trade either a Euro CAD is potentially short trade, I mean long trade almost ready. Likewise, the Euro New Zealand is almost ready, because it's done a deep retracement. For this one to be series of 1, 2, 1, 2, I would not expect this leg to come down and take out this low. Take out this low, because we've done wave A, wave B, and we're still coming down to wave C, but we shouldn't come down much beyond the beginning of wave, this last wave 1. Okay. If we did fall back to that sort of level, then maybe this one is not 1, and we've got strange looking sideways correction. So then we may have an alternative 1, and then all of this alternative 1, then we've got like a wave A, and then all of this is some kind of a double zigzag wave B, and we are coming down into wave C. So then we'll have wave 1 in double bracket, wave 2 in double bracket, and even then we'll start moving up in a very strong wave 3 to the upside. But if this trend line support holds, because that connects this low, and these two higher lows also bounced on it, and currently we seem to be finding a support in that area. So I think that we have a bottom almost ready to go up, and in which case we'll have 1, 2, 1, 2, and then we'll be starting up on a 3, which will be 3 of 3. Okay, so Euro New Zealand also ready to go long, and then we'll look at the Euro Aussie. And the Euro Aussie actually is in a similar state in terms of getting ready. Is that we've had this wave 1, wave 2, and this one here is, I think, a wave 1 and 2 is just like the Euro New Zealand. This is a double super nesting. It's a wave 1, 2, 1, 2 kind of a sequence, and unlike the Euro New Zealand, which looks very strange, this one is coming back right back to this rising baseline support. So we've connected this low, and then this higher low, where we've done a copy paste and applied it onto this, which was an undershoot. It never really came all the way to the baseline. So basically now in that region we would expect possibly this current price coming into it to find a support, and we have a 100-day moving average which is coming right into the same place as well. So it's coming to the baseline of the rising trend channel and the moving average, and horizontally we're in an area where you have a support. So everything seems to be almost ready. It's taken a longer in terms of congesting for that one compared with some of these other retracements, but I think it is ready and is shaping up. And also previously we've explained, unlike the Euro New Zealand, this one looks very sort of risen quite strongly, then it did this here which looks like a cup, and then it did a small handle. So we had a cup and handle broke, and it's come back to retest, and we'll be looking to go up, and I think this will be a very strong leg to the upside, I reckon. So Euro Aussie is also ready to go long. If you look at it here yesterday, for example, we had the low which was there, and so far we seem to have held that low. So it may even be that in this process of launching itself into this wave 3, we probably got a minor, what I call a leading diagonal. Okay, a leading diagonal in terms of wave 1, 2, 3, 4 and 5, and even if it wasn't a leading diagonal, still a clear 5 wave to the upside, and we've done A, B and C. So you know, normally you expect quite a deep retracement, and this one is come down into, like, you know, fairly deep. It's come to if I put a Fibonacci on, you'll note that it's almost like a 78%. Yeah, 78% retracement. So you know, it's acceptable retracement, and we're coming back into the baseline. So again, this too is ready for going long. So the question of which particular pair you'd want to trade, whether it's a Euro CAD, Euro Oz or Euro New Zealand. Well, out of the two, so far in the recent times, the New Zealand dollar has been relatively strong against Euro, against the Aussie. So if you look at the Aussie New Zealand dollar against the Aussie dollar pair, then you'll find that the Aussie dollar has been weaker. So from that perspective, and from the perspective of this rising trend line support or a baseline and the horizontal area, I would suggest that out of the New Zealand and Aussie, we probably select the Euro Aussie pair. And in fact, out of the lot of them, is probably the clearest one. Even from the Canada is relatively stronger compared with Aussie. So the best pair in that case would be Euro Aussie to go long. But the fact that the others are at the similar state indicates that, you know, there is a high likelihood of Euro Aussie shaping up for a long trade to enter, with a confirmation from the other pairs like the Euro New Zealand and Euro CAD. Okay, so we'll drop back to some US dollar pairs. So the next one, we've done the Canadian pair. We're going to look at the pound, US dollar pound. Now, you know, technically there are a lot of arguments for potentially saying, you know, look over here horizontally we've broken out to the downside, you know, and these are all potential. There's no 100% defining. Even this, what looks like a symmetrical triangle, is one, it is an interpretation that it is a symmetrical triangle. It's not confirmed symmetrical triangle, because on the valves on the bottom we have 3 touches and we've broken below. So from that perspective, the trend line to the bottom is clearly a support, but the trend line on the top, you'd have to really draw a trend line. If you're being very meticulous, you'll have to chop some of these to actually come to that, and maybe say, even if you compromise and say, okay, it's a symmetrical triangle, but it looks like a symmetrical triangle, and you know that many of these geometrical patterns often, not always, but often do fail. So even things like head and shoulder, we often make a big thing about, they fail. and when they fail spectacularly. And likewise, this symmetrical triangle, if it should fail, it should fail, in a fairly big way. But equally, what I'm going to outline to you is that, and again, these are hypotheses, and basically the idea with these is none of these are confirmed and 100%. So we'd have to try and see what we do with this. If we missed, we missed. Even if it means that we've missed potential life-changing fortune, but there is nothing we can do about that. Okay. So what I'm saying is that from the low, I am still thinking that we had this severe drop, and we had this ABC up there. So in a sense, I was quite happy to say, okay, we've had a retracement, and we've retraced that, so we should really be going down, but we spent such a long time here sideways, and because of that, there'll be a lot of people who will be very, very bearish on the pound, and particularly with all the economic headlines and the news and everything. There's basically nothing going for the pound at all, literally. Comment from the Bank of England representatives, job data, potential GDP growth, having lost the AAA rating. There's really nothing at all for a pound going. But the only thing that is going for the pound is this. In this area, it's a zone. When we sometimes put a line, sometimes it's very clear defining line, and at other times it's a zone. Zone meaning, if this is the weekly chart, if you're looking at an hourly chart, then even then a zone might be 10, 15, 20 pip range in an hourly chart. So in weekly chart, for it to have a couple of 100 pip, zone is not an impossible, unreasonable situation. For example, over here, you see this area, you can see I've drawn it as a support. Why have I drawn it in a support? Because I think, look, over here, price found a resistance, fell below, went back up, and we oscillated on either side, but then we never quite came to that support. The support was a little bit higher up. Then over here we came to the support. Over here we never came to that support. Now we've come back into the support. So, is this a false break? Is it a real break? Well, I couldn't really tell you. I've no way of telling you that. But what I am telling you is this. You see, on the RSI, we've come to the lower end. So it's not exactly oversold, and I don't use RSI necessarily as an oversold, overbought indicator. I'm looking at it as a potentially saying it's come back to the lower end. So that's one. And it's come back to the lower end when the prices come to what was support or just only marginally breached. So that's significant. I mean, if it fell really sharply from there, then I understand, but it's only came there marginally. Chopping it by a couple of days closing below that, or even 1 week closing below that, is not necessarily, in a larger scheme of things, a confirmation that is completely broken down. But we've come to the lower end where previously we had a support. So we have a potential support in that area. If you look at this indicator or any other momentum indicator, you'll see we have equal bar. If you look at this on a daily, you can see that over here momentum is turning to the upside on a daily. You can see we've now almost flipped to the upside. And over here, when we were below this, we flipped. We only had a couple of days and we fell back and had a severe sell-off. Now we've come back into this, so it's nothing to tell us whether we would not get another sell-off. Okay, so for those who may want to short this particular currency, I think it is really dangerous to short at this level. Why? Because it has fallen all the way. Where on earth are we going to put a structural stop loss? So from that perspective, I would not short. Secondly, we've come into that zone that we just painted. Okay, but more importantly, this is the point I'm going to make to you, and you can consider it and at least see what might be happening. Okay, see this red line, all I've done is I've connected this high and I've connected this recent high beginning of this year, and I use the same line, copy paste and put it in the bottom. And what I'm going to show you is little interesting is this. On the bottom you see it connected this low, okay, which is a low back in on the daily chart, low back in December 2010. Then this one didn't quite make it, okay, these other three didn't quite make it, but if I did this, copy paste and do that, then you'll see that we got the other two also do a hit. Okay, so we had this one provide a support, even this one I would say is allowing the fact that there is a small degree of, like this one is about 100 pips, so if you're prepared to accept like a zone. And then see over here, see there, I mean we've got nothing else. This is the sort of thing. So you've got high, support, and then these ones never quite made it to that baseline. So if you put a parallel line to it, then we've got basically these two also almost exact hit on it, right? Then we continue here and we've come right into it. We've come into this higher line, not the bottom one but the higher line. Okay, so it's significant there. If you look at the momentum now, momentum is curling up. That means the down momentum is easing. It's not finished, but it's easing. That means the force of the downtrend is probably disappearing now. Okay, and then along with this red line, I also still have a divergence. Whether we like it or not, still have a divergence. So if you consider this low, which is the low in June last year, and the current low, then the current low is lower than the previous low, and we still have on RSI, we still have higher low so far. It could fail because if the prices fell sharply, we could get another low on the RSI, but at the moment it looks like it is still potential divergence. So from those perspective, I say horizontally we are still in an area of potential support. This trend line, declining trend channel, we have come to the bottom end of the trend channel where previously often prices bounced off even though we are lower than those previous ones. So for all those reasons, I think we are at a potential exhaustion end, and even though we might not go all the way back up to there, even if we simply just rise up and maybe retrace some of this back, possibly to say come back to absolute minimum 153 or maybe like 155, right? We have come to the bottom and we should be making our way to the upside. So because of that, I would not be interested in shorting this particular pair. If I really want to short, and I think there will be a good chance of shorting, then I will be looking for an evidence of a bounce exhausting in the area of 55, ideally, not even at 53 because it's too small, too small retracement. But if we say, for example, we have this down trend line, which is this trend line here. If we do it this way, for example, and we copy paste and put that one over the top, so we come into this area there, or we draw an actual trend line on the high and this high, doesn't matter which way because we're only looking for just a guide, really, something like this. So at the moment, if we go up there, we come into that area, that trend line, and approximate like a 38% retracement of the entire drop. That would bring us to 155 area or just below, and we see maybe some confirmation of trend exhausting in that area, the bounce exhausting in that area. Then it's possible we could consider a trade short with a view of it coming down, and even then we would have to have a stop because on this 4 hour we've got no other way of putting a stop anywhere else. So we'll probably put a stop over here, for example, and then we've got like 350, 400 pip. It's too much. But maybe the trend line would be something to guide us, and maybe if we get a confirmation on 4 hour, then maybe we could use high of the closing bar as a potential. Okay, so that would be the only way to short. However, I think when I was saying that we could be looking for long, I think the long entry is already here. If you look at it, even if you don't want to trade this, I think the long entry is already here. I think we had the bounce, and see it so far, keeping in mind that I'm not saying we are going to go all the way to the top, but the fact that is, you know, intermediate low, interim low. So we got small one. Let me just expand it a bit here. So we got this small one, small two, and then we've gone into this wave 3. So we've got 1, 2, and we have a wave 3 here, 4 and 5. So we've got finished 5 wave, ABC down. So we've really completed the correction. So what's going to happen if you drop down to even smaller time frame? Okay, so what I mean to say is this wave 1, okay, then wave 2, A, B and C as the wave 2, then we had the wave 3, wave 4 and wave 5. Okay, so the 5 wave pattern is finished. Then we had A, B, C to the downside, so that's finished. But this one here so far doesn't look very convincing in comparison to the other. So maybe what we're going to have is this will be like a bear flag. So that would suggest that maybe we'll get another drive down. Entirely possible. Okay, so that would be 1, 2, 3, 4 and 5 wave down, or it would be like a wave A, wave B and then wave C, and within a wave C we got 1, 2, 3, 4 and 5. Maybe that's what it is. So I'm expecting really that this next leg down on this 30-minute chart or whatever time frame chart you want to choose, if you put a Fibonacci of this here, we've already retraced 50%, which is fairly good. If you get a drop down to something like 61.8%, then I think we'll be in an area where you could consider going long, because then your stop will be over here. That's about 87 pip or 100 pip below, and at least you expect it to go back and retest this area, right? So that's like 150. So you've got like one and a half times potential of your risk. Okay, we also will have a trend line coming into that area somewhere. Not sure if it will line up, but say if you connect this low on this 30-minute chart, 30-minute chart, and you know draw parallel line and put it up there. So if we get to anywhere in this area, we could be quite possibly looking for a long entry with a view of retesting this area here at 152, 153, but more likely higher. Okay, and then if you can also look at this, then what is it looking like? It's looking like you got a left shoulder, you got a head, and you're probably in the process of making a right shoulder, and that would be the neckline. So you broke above that, then you'd be expecting that sort of a distance repeating on the top. So you'd be coming to 51, 55. So this is a good long-term entry if you did want to consider long-term entry, and it's a safe because you can quantify exactly. If you're wrong, then you'll be able to put your stop over there, and you're looking for possibly 100 pip or so stop, with a view of that eventually it could go up there, and you could be looking for maybe an upside if it gets up to here, upside of nearly like 400 pip. So that to me would be a better trade rather than speculating on whether we should be shorting or not. And I'm going to also show you something else. I was trying to find the page here for Dow Industrial, and I didn't find it, but I'm going to show you here. I think there is there for British pound, and these are all confirmatory or like additional details to add on. You know, none of these things guarantee anything, but it's, you know, how do you put things together to try and give you a good likelihood of being in the right place. Okay, this is the pound here, right? So look at it. You've got, this is a non-commercial, which are like large speculators. So they will be like people with a lot of money, hedge funds and you know, large money managers. Then this middle category is commercial, so they will be like banks, like Barclays Bank and many other clearing bank. Then here you're non-reportable, that be basically like you and me. Okay, so we forget you and me generally speaking, because, you know, people make too much about retail traders, you know, being wrong, and retail traders, you know, get skinned, and retail traders, you know, they've got stops here, and other people go and hunt for the stops. But for goodness sake, you know, if I only got $1,000 in my account, Even if people come and hunt me down and kill me, maximum they got is $1,000. So is that going to change the market? Hardly. I think the people who really change the market is these people here, these hedge fund people. They can suddenly, you know, put a position out there for 4, 5 million, 10 million, 20 million, you know, that kind of, and if few of them do that, that's the sort of thing that really moves the market, not you and me playing our little retail trade. You know, it really, it wouldn't even satisfy an ant, you know. So don't focus on that one, but sometimes even that one would give us a very clear sentiment or confirmatory sentiment, but I would, generally speaking, ignore that. So the one I'm going to focus on is this one here, which is non-commercial. So they are the people who are people managing money. They might have a fund that they've got probably, you know, 10 million, 20 million, you know, or larger size of fund, and they are putting on a position. So see what has happened. See long position. Okay, so what are they doing? They are saying that on a Tuesday last week, there were 31,000 contract open, and that 31,000 contract open was reduced by nearly 10,000. That means the week before there were approximately 40,000 contracts open, and out of the 40,000 contract they've dropped it to 30,000. That's a 25% reduction in people wanting to go long. That means the people who were long, they've bled all the way until pound has bottomed. Now pound continued to decline even after last week on Tuesday. So all those people, 25% of people who were long, they were hoping against hope, and the pound did not bottom, and it actually bled them, and they have thrown their towel in, and 25% have accepted that they are wrong. So I think it's a sign of capitulation. You know, I can't see anything else. I think that's a sign of capitulation. If you got 25% of overall investor giving in 1 week, to me that is a sign of capitulation. And where is the capitulation? Is at the bottom end, at the support. And why? Because everybody is saying, you know, the support line being broken, horizontal support being broken. Pound is now plummeting, and it's never going to ever going to recover, you know. So they have already thrown the towel, 25%. And then look at the short position. There were 67,000 contract short last week on a Tuesday, and the short position actually increased by 3,000. So in other words, the week before there were approximately 70,000. There were approximately 64,000 contract open, and the short has actually increased. So if you are really talking about who is caught on the wrong side, it's this non-commercial is the one who get caught on the wrong side, or they overstay their welcome, you know. And in contrast, look at the commercial. They had 155,000 pound contract long, and what have they done? They've actually increased the long position by 26,000 contract. So that 26,000, so if you take that away, then it would have been 125,000 contract last week on a Tuesday, and they've increased it by 26. So now they've got 155,000. So that is almost like 1/5. 1/5 is 20%. So whereas 25% gave in and throw the towel, the commercial have increased their position going long by 25%. So who is correct? I think it's this commercial who are correct, and the commercial are the ones usually, you know, they're never taking any higher risk. They're basically hedging their position most of the time, and they're generally on the right side of the market. So I think it's this non-commercial who's given in at 25%. So looking at that, I think that pound has actually bottomed. And if you just want to come an absolute confirmation, then you'll see something similar happening in other pound currency pairs. It's not just the US dollar. At the moment, euro's been strong, and look, even against the euro is weakening against the pound. Okay, it's retracing. Before it was gaining, it's retracing. So pound is appearing to be strong against the dollar, against euro. Look at Canadian dollar. Look, on a Canadian dollar, we are soon, not quite ready, but if we form this part over here, we've got potential left shoulder, we got a double, triple head or triple bottom on this 4-hourly chart, and we are producing a right shoulder, and we're going to crack up. Okay, so that one is supporting a potential bottom. You look at a pound New Zealand. pound New Zealand is a very clear head and quite a chunky looking shoulders. So if this one, if we do nothing at all, we are again on a short end, bottom end rather, not short, but bottom end. So the head is currently about 220 pip away from the current price. That's where the head is. So if you put a very small position, which is not going to risk your capital by more than 1%, and you're able to put 200 pip stop loss initially, then ideally you should be able to get long on a pound New Zealand. Or you could wait and say that wait for it to break above the shoulder length, okay, because then you have a confirmation it's actually going up. And also you might be able to put this trend line on there now temporarily. It's not confirmed yet because it's not going up yet, but if it begins to go up, then you've got a potential trend line. So you'll be able to put a trend line on the bottom, you'll be able to put a trend line on the top. So effectively when it goes, you'll be targeting that. So ideally, if you're able to get long anywhere here, once it breaks above, you'll be looking for that one to run quite a bit. So this one is suggesting the pound is probably bottoming. And then you look at the pound Aussie. Pound Aussie doesn't have an exactly head and shoulder pattern, but look, it's got a potential bottom here, and I think this one is a rising wedge. So it's like a 1, 2, 3, 4 and 5 rising wedge. Then we've got A, B and C. So that gave us wave A, B and C. So we're doing like a flat correction. So currently we should be expecting a 5 wave to the downside. So in the 5 wave we've got wave so let me just go over that again. So we've got wave A, B and C is wave A, right? And this one I am not convinced that it is a wave A. I think it's ABC. So ABC X ABC, I think, something like that. Or we might have some complex sort of a thing like this, like that, okay? So in which case we've got A, B and C to give us a wave A, then we got A, B and C to give us wave B, and we are coming down in final leg. And that final leg is probably nearly complete, right? So we should be at the bottom end. And look, if you put this trend line on a daily chart, you got a low, you got a low, and you got a low. You got 3 points. So if you now want to go long, potentially you could even do this one. You could say if this price either breaks above this last pivot on an hourly chart, or if it drops down to the baseline, then you can enter long and you put your stop just below here. That's about 51 pip stop, and you could enter long, knowing that is on a pound Canada is long, pound New Zealand is long, pound Aussie is long, and also against the pound dollar, it looks like it is bottoming and already has bottomed. So from those perspective, I would be looking, and my original aim of trying to find a bottom, because we didn't short, so we were on the wrong side, but it's a good job that we didn't actually lose anything. We were waiting, and often finding a right opportunity is like that. I wouldn't necessarily trade long on a pound dollar, but I would probably pick pound New Zealand or pound Aussie to go long, because long term we've got potential for those. Look, I mean, even if it trades up to here, breaks above, trade up to here, head and shoulder height repeat, goes up to here. What are we talking about? It's nearly 350 to 400 pips. That's a kind of trade that could really change your account, even if you're entering with a relatively small position. Okay, and same with the pound Aussie. Pound Aussie's got the same. It breaks out of that one. I've no qualm about it going up to this level here, right? And we're talking about nearly 600 pip. So pound Aussie would be a better pair to go long, and that would suggest that the Aussie is weak, because even against the euro is best pair, and against the pound is the best pair. So the Aussie is going to be weak. New Zealand is going to be stronger. Okay, so if you really wanted a contrast, but it's a rather slow trade, so I wouldn't recommend it. But if you really wanted a contrast, you could even say, for example, wait for a retracement to finish on a New Zealand Aussie pair, and then you can short the Aussie against New Zealand, because it will be like a euro pound pair. Okay, so pound is bottoming. this commitment of traders report almost suggesting that it is bottoming. And whilst we run a traders report, let us just also confirm what the euro situation is like. And I had it here, euro here, euro FX. So euro, it's got, as of Tuesday, it's got nearly 75,000 contract, and that's a long, and it was reduced by 6,000. That means people are giving up on euro. How much are they giving up on euro? Well, they've reduced it by 6,000. That means there must have been 80,000 before. They reduced it by 6,000. So from 80 to 6, what sort of percentage is that? My maths failed me. Let me just do a quick calculation. So you got 6 divided by 80. So that's like nearly 7.5%. Okay, 7.5%, which is almost like, is that right? It's supposed to be more than that. 6,000, 6 divided by 80, yeah, about 7.5%. So 7.5% of the people gave up and closed their long position. Okay, but then look at the short position. This is the sort of thing you need to take care of. Shorts on Tuesday last week was 84,000 contract, but it was increased by 22,000. So the week before it was 22,000 less. So they would have been like 64,000. So 62,000 contract change into 84. So they've increased it by 30%. Because what are they expecting? They're expecting, just like they're saying on a pound, that pound is never ever going to recover. They're thinking euro is now going to plummet to parity and maybe even below parity. Right? Now that suggests to me that the people are capitulating on euro. And the euro, I think, has bottomed. So let me just, that's a final chart we're going to look at now. So pound we've done. The euro, I think has bottomed, and my two possibility are this: these waves numbers are put on. You can just sort of keep them as a note rather than a definite number, because there are several different ways of doing it. It may be like, say for example, one would be is saying instead of A we say W, then instead of a B we say X, then here we have another swing, so we got W, X, Y, this one could be X, and we get another swing up to give us Z. So in other words, you'll finish with a triple zigzag. Okay, so triple zigzag, so they will be almost like an impulsive, but they're not an impulsive in a normal sense, because we cannot label the waves 1, 2, 3, 4, 5 on all of them, and also sometimes you're getting overlap. For example, you know, this one has overlapped this, so here we could W, X, Y, X, Z, you know, just a quick drawing. So you know, maybe that's possibly what's happening. So if that's the case, then maybe what we should have, we should have a bottom, and we should get another drive up, and another drive up will be similar to this, okay, from there. So that means if I just quickly do my charting and say this one here, change the color of that to say something like green, okay, and then I put it over here, then see this next zigzag came almost close to it. So now we could have a third one, which means that the euro could be now making a run towards something like 140 if we have this triple zigzag. Okay, the other one would be that we've got a scenario where I won't do another drawing, is basically the same outline, but instead of just WX, YX, Z in that particular manner, what we would have is we would say this one ABC to give me W. Okay, then we have a wave X, and then we'll get another ABC to the top. Okay, so we'll get ABC here, so we get X, we get another ABC, in which case we'll get the whole length repeated at the bottom. So we're looking for euro basically to bottom out and run. And you already know about my explanation about this blue trend line I've drawn is coming into potential support. On the daily chart, on RSI, we are again almost like the pound at the bottom end and looking to turn up. And then if you look at it on a shorter term time frame, like a 4 hour, then there are various Fibonacci retracements coming into this particular area. And I think what we have potential is we got this AB, this WX, YX, Z, so gave us triple zigzag to wave A in bracket, wave B in bracket, and we've got something similar here. This is WX, Y, X, Z. So either Z is in, or we might get a Z in by another low. Okay, now we don't know. So either we'll get a retest of this, or we have already put a low in and we start going up. Now Fridays and Mondays often the low are put in, so maybe we've got a low already in, because that was the low on a Friday is held so far. So maybe we, that is in and we should be going up, or we have this one more leg down, because on the dollar index we were suggesting that we've probably got one more leg down. So dollar index got one more drive up, so maybe we've got one more leg down on a euro. But in a sense we are at a zone where potentially we could be expecting a turn, and that turn will last for a while. Like this one, for example, lasted from 1st of February up till now, so we're talking about nearly 5 weeks. So the next turn going up could easily last at least another 5 or 6 weeks or longer. If you look at this one, then on daily chart it lasted like almost like a 56 bars. 56 bars is almost like 2.5 months. So maybe here we could have at least a month and a half absolute minimum, maybe just going up like this one. Okay, so I think we are in an area where a potential bottom could be formed, and change in the commitment of traders report last week, because even after that Tuesday we still had some further drive down. So you can imagine what people must have done on Friday. We won't know about that. We won't know about what people's position is like exactly today, because today is Tuesday, until end of the week on a Friday when the data are released. Then we will know. But we will have found out that potentially we should be looking for a bottom on a euro, and the dollar should be almost looking to top up, because dollar should top now, or it's got a one final leg up. Okay, either it's got to top now, or it's got to go up a bit more and top out. And which sort of currencies could make it top? Well, we've got a yen. Yen is still weak, so if the yen remains weak, dollar can go up. Canadian is still weak and could get this one up, and euro could weaken a little bit, and pound can weaken a little bit, and all of that would suggest that the dollar will top out here soon. So that's my general feeling, that we are at a place where potentially there's going to be a trend change compared with what we've had over the last few weeks. Okay, so that is the all the bit that I wanted to cover. Hopefully we've identified some clear trade that we might be interested in individually, and you can try and find out or do your own analysis to try and hone in to an exact area where you might consider going long. But I think there are interesting position in the euro pair as well as in pound pair for potential long entry. So thank you for all that, and I will post this video both on the drop box and on the YouTube, assuming that there is no problem with this one. So I'll stop the recording here. As usual, any comment and questions or anything else you want me to clarify, do let me know. Send me a Skype or an email, and I will address them in the next session. But in the meantime, I do appreciate you joining me. Thank you for your time, and I hope you found this useful, and I look forward to you joining me again tomorrow, and wish you wonderful trading in between.